R Venkatraman, MD at IIFL Group. He joins in to talk about the fundamentals of the market. Venkat, hi, morning. What are you feeling about the market? Just 8 days to go for the budget and we're already staring at a nice pre-budget rally, 7,700 almost here.
Actually, if you look at the markets, post the elections of May 2014, the market had a very nice rally. So all eyes are on the budget, and our guess is that if you look at the outcome and compare that to the inflows, so in spite of such a big event which took place on May 16, 2014, people are still skeptical, and too much of euphoria or actual flows coming to the markets has not been seen. So as of now, all eyes on the budget. We have had a very nice pre-budget rally. There had been some dark clouds, not the monsoon variety, but the other variety, which were on the looking at the market, especially what happened in Iraq and the delayed monsoon. Touch wood, today we have seen monsoon actually touching the shores of Bombay. So the feeling we are getting is at this point in time, all eyes are on the budget, and there is a lot of I would say expectation built into this budget, especially after the speech which the Honorable Prime Minister made in the Parliament, where he talked about very pragmatic economic measures. He talked about reforms in manufacturing, job creation, agriculture, extremely stable tax regime, FDI, increasing ease of doing business in India. So there is I would say, a huge amount of expectation built into this budget. So till the budget we expect a rally, and then as you rightly pointed out, we'll wait and watch and see what actually the Finance Minister delivers on July the 10th before taking a fresh call on the markets.
So what would you recommend to our viewers then, Venkat? Go fully invested into the event or keep some powder dry with them?
See, our recommendation to the investors is that if you see the event that took place on May 16, 2014, it is I would say a giant event, and people have not still woken up to the ramifications of such event. Events like this happen rarely, and many a time people look back and then say, oh my God, that was such a big event. And I can just give you with my own little experience in the markets that the budget of 1991 or the reforms which was unleashed in 1991 by then Prime Minister Mr. Rao and his Finance Minister Dr. Manmohan Singh. And if you go back and step back in time, the events were more or less similar. We had on a bar one thing which was the stability of the government in the center. We had the same. Iraq had just attacked Kuwait, and India was staring at the bottom of the barrel when it came to foreign exchange reserves. We had an economy which was going nowhere, and steps were taken, and maybe 5-10 years later people realized, oh my God, that was a turning point in Indian history. So our feeling at this point in time is something similar. And what is happening is, after 30 years we had a stable government in the center. We had one party majority, and that party is actually talking the right economic language. I think the most, I would say the most important takeaway for me at least of the Prime Minister's speech in the Parliament is he addressed economic realities. He talked about job creation. He talked about improving infrastructure. He talked about improving infrastructure not only in urban India but also in rural India. He talked about ease of doing business. He talked about a stable tax regime. And most importantly, which was there hidden in the sideline, was he talked about targeting subsidies. So he talked about using technology to improve delivery of subsidies. So I think maybe this budget, actually if you look at it very practically, there's so much of expectation, so much of hope built into it, and so little time at the hands of the Finance Minister, that I personally think the odds of a blockbuster, a dream budget are unlikely, because but I think what is going to happen in this budget is going to make a roadmap. He's going to make statements on what we should expect in the next 12 months. If he outlines his ideas and actually he delivers on what we expect, then the economy which is struggling at the 5% or 4% range will see a delta shift, and we'll again go back to this 8, 9, 10% range. And if that happens, I think it's extremely good for not only the market, for good for the country and for all of us. So our advice to investors is that stay long, stay invested, increase your equity exposure if you have, and stay invested. No bull market gets over in 1 or 2 months. No bull market gets over just because we had a bad budget. So things will play out in the longer term, and believe in the India story, and keep your exposure to equities high.
Venkat, what happens if the wow factor from the budget is missing? Nothing comes on GST, nothing comes on fiscal deficit, nothing comes on a grand plan on what government wants to do.
Okay, actually I was just telling that the biggest risk at this point in time is that people have expecting a completely a budget for everyone. You'll have, and if you go by the mathematical definition of the budget, he has to basically make sure that he has enough revenues to take care of all his expenditure and does not increase the revenue less expenditure gap. So he is also going to have some boundary condition within which he has to work. So he can't announce a budget in which he pleases everybody, because theoretically that's a quote unquote an impossibility. So so actually, if you ask me what the market is expecting and why we are seeing this kind of euphoric rally, is that we expect some statement on GST. I think if you ask me, odds are high that will happen. Most people are expecting some amount of cut in CTT, STT, which in our opinion is anybody's guess out there. It's like difficult to take a call. We expect a stable tax regime, so we expect some kind of statements happening in that. There is a talk that the income tax slab will be changed from 2 lakhs to 5 lakhs. I think odds are high that might happen, because 2 lakhs is very less a number given the current level of inflation. There is talk that Section 80cc limit will be increased from 100,000 to 150,000 with special dispensation towards medical or health and life. So that can happen. The big unknown number at this point in time is the fiscal deficit, and what is going to do statements on I would say subsidy targeting. Divestment number, if you read your own newspaper, I think today there was a headline that there will be a large amount of divestment. So I think there will be a kind of jostling happening around on the give and take, because he is also to manage his revenue less expenditure. But what we expect is that, what I would say that he gives out a road plan on how the economy will increase from this 4.5% band to the 7-8%. And that is what is the key takeaway. And that is what, if that comes in the budget, I think sooner or later, after the correction or whatever, things will come back.
As a house, you've just released a mega report on why should one buy into PSUs. Now, PSUs is a very large basket. By definition, it's a big group. What do you like within PSUs?
Okay, actually we have come out with I would say a big report on the PSU as a stock, as a sector as a whole, and I'll just highlight some of the key arguments in that entire thesis. The first and foremost is that in the last 5 years, PSU as a pack have underperformed the broader market in a significant manner, and the problems of the PSUs are well known to most of us, and I will not dwell into that. But we believe that, given the fact that Mr. Modi had an extremely good track record in actually unleashing the power of the PSUs or the state-owned enterprises in Gujarat, so we believe that the PSUs, which actually have a dominant market position, will be freed, and they'll also be a big beneficiary of the economic revival that is taking place. So amongst the PSU pack, I would say that the stocks which we like, and some of them have actually run up quite sharply, is Bharat Electronics. That is a play on defense, and there is lots of noise happening in increase in defense procurement, and release of orders and so on and so forth. That's a well-managed company, zero debt and profit making. Last 2-3 years, they have actually seen some kind of EBITDA shrinking happen because of delays in orders, but we expect things to recover. We like the oil pack, in which we like ONGC and BPCL, primarily because of the dominant position, and they will be a direct beneficiary of any cut in subsidies or better subsidy management. We also like the stocks like REC. And so these are some of the stocks which we like in this PSU sector. And amongst the banking stocks, the largest banking stock, which is State Bank of India. So these are some of the stocks which we like in the PSU pack.
Well, just 2 points more and we'll be there at the 7,700 mark, which is why I think we'll keep it static with this tick-by-tick chart. and 76.98 is where we are at currently. Just 2 more points and we'll get there. But Venkat, what about the auto sales numbers? Some good performances coming in from Maruti, etc., but then some big disappointments as well coming in from, an instance of Tata Motors this time.
The autos is a difficult call to make as of now, and in fact in the morning also we were discussing with the analysts what we make of this entire auto cycle. And as you rightly pointed out, we have seen traction happening in passenger cars, where the likes of Maruti announced extremely good numbers, and we have the commercial vehicle segment which is not showing I would say any signs of revival. So we had 2 months of good numbers on the auto space. So and actually it is too early too early in the cycle to take a call whether it's bottoming out, and we'll see from now on month after month of better numbers. But just to give your viewers a perspective, in the entire autos as a SPAC, an auto sector has been hit very badly for the last 2-3 years, and I think in my working career this is the longest time we have seen a down cycling happening. So I think the likes of Maruti should start doing well because of pricing. I think there's discounts raining everywhere. So maybe that is some amount of that is which is kicking the numbers up. So it is still early stages to wait and watch. And on telco, I think monsoons are again we had a bad month, and going ahead also the monsoons typically don't see big numbers. So maybe in Diwali time we should see some revival. But having said that, I think both this is a large sector, this is a large cap sector, and if the economy goes from this 5 to 8%, this will be a big beneficiary. So I would say Maruti is on our preferred list of buys, and I think we also like telco, because at this point in time we are seeing the bottom of the cycle, but when the cycle turns, I think we'll see a long play happening in the commercial vehicle space.
Coming on industrials, what is your take there for names like L&T, BHEL, Siemens? Are valuations still on your side?
It is a good question on this industrial pack, because on one hand you have the Larsen, L&T of the world, and the other side you have the BHEL and Siemens. So at least on the BHEL part of it, we think that maybe as you pointed out, price has run ahead of valuation. So it has done very well. It's trading at 250. So maybe I would agree with your hypothesis, but on the L&T front we are optimistic, and I think we investors should buy and hold the Larsen stock. Maybe even if you have a quarter which is disappointing, in the long term, 3 to 4 year, maybe 2 to 3 years, you'll still make money in L&T.
So the basic thesis is that Indian economy will recover, consumer demand will make a comeback. So should one bet on a Maruti or should one bet on a Tata Motors?
Okay, if I would say you should bet on both.